Hello guys, welcome to today's session in Quantsapp. Right, so have you ever wondered, like, if we are trading in the market, so 60 to 70% of the times the markets are not in our favor, right? So today I'll tell you a strategy with the help of which if the market goes in your favor, so you will get a handsome profit, but if the market will go against your favor, so still you will make a limited loss, not unlimited. Right, so before moving towards the video, right, in today's lesson, if you are new to the video, you can go in the description, there is a link below, you can download and install the web application of Quantsapp. Okay, after successful registration you will get some free tools here that you can use in your trading and maximize your profit. Also in the learn section we have a video library, right? So you will get multiple videos here on multiple pro plus tools and various strategies, right? You can see these videos in multiple languages, so we have English, Hindi, Gujarati, Marathi and Tamil also, right? So you can choose your preference. Now at any point of time, if you are having any kinds of doubts or query, so you can go in support. In support we have our contact number and email ID, so you can directly reach out to us and we will be there to sort your queries out. Right, so let's get back to today's video. So today I'll be talking about some strategies that will help you out, okay, in making some good profit whenever you are not very much sure about the market. Okay, let's start. So right now I'm in the blackboard. Okay, now what if I'll tell you you are trading and you are very much sure about the market, like 90 to 100%, okay, 90 to 100% the market will be in your favor, right? So at that time what we generally do, we just go for the buying side. So what I'll do, I'll just buy a call. Okay, I'll buy a call, so when my market will go in the above direction, so I'll get a profit here, I'll get a profit. Okay, so I'm 80 to 90% sure. Again, when I'm 90 to 100% sure that market will be in the negative direction, okay, so in that market was in positive direction, and in this one I'm thinking like market will be in negative direction, and I'm 90 to 100% sure with my strategy. So at that time what I'll do, I'll buy a put here. Okay, so I'll buy a put here, so if market will go in the negative direction, so I'll book a profit. Okay, so these two things are called the naked call, in which we are just buying one position, not anything else. Okay, and we are very much sure. So only then when we are so much sure about our trade, about the market, so then we go for this position, naked call and naked buy. But what people usually do whenever they are not very much sure about the market, like for the 50 or 60, they are having a confusing view, like if the market will go in this direction or not, but they want to take a trade, they still go with the naked call. They still buy a naked call option or naked put option, and that is when they book loss in the market. Okay, and that loss is very huge. So that is what I'm going to teach you in today's lesson, like how you can make some good strategies. Okay, so for that what you have to do, you have to go with the hedging. Okay, now if I'm talking about hedging, what hedging actually is. Okay, so hedging, I have told multiple times in previous videos also, hedging is protecting your, you can say protecting your losses. Okay, protecting your losses. For example, when you were buying a call here, right, at the time you were 100% sure, but what if you are only 50% or 60% sure that the market will go in the bullish direction, but still you want to take a trade? But at that time we also make a position, we also hedge our position, our call side with another leg, okay, so that if the market will go against our direction, still the loss will be minimized. Okay, the loss will be minimized, and there can be times when you will get some profit also when the market will go against your direction, right? So that is when we use the hedging. That means to protect our losses when the market is going against our direction. Right, so let's see, there are two strategies that are very simple and that you can use, okay, and that will not require much margin, right? So I'll be talking about the debit strategies that you can use here. Okay, now when I talked about the debit strategies, so some of you might get confused, like what are debit, right? So for example, if I am buying something, so at that time what I do, I pay something, right? I pay some premium or margin, you can say. When I'm selling something, so at that time what I do, I get credited. Okay, so I get credit because when the time I'll conclude my trade, I'll buy this position, right? So this is the credit, okay, and this is the debit. Okay, so right now I'm going with the buying side. Both of my legs will be in the buying side, right? Both of my leg will be in the buying side. Or if I'll do the selling, so my selling premium, if my selling premium is low, for example, if I'm buying a leg, a position I'm buying, so I'm buying it with the 104 premium. And if I'm selling a position, so I'm selling a premium of, you can say 12. Okay, so 104 and minus 12, so it is approximately how much? So 4 इसमें से, okay, so then I'll be going with the 92, right? Okay, now what if I'll tell you कि this one, so you can say this one, the call side is bigger. Okay, so that means I am creating a net debit strategy here. Net debit strategy here. Why? Because my premium of buying side is high, so that is why this strategy is net debit strategy, right? Similarly, if I'll buy a larger premium 104 approximately, okay, and the low कट कर देना, हाँ, यहाँ से फिर से स्टार्ट करते हैं, ठीक है, चलो 1 2 3 start. Now if I'll buy a premium of 104, sorry, if I'll sell a premium of 104 and if I'll buy a premium of 12, okay, so now in this I'm selling a huge premium as comparison to buying. In buying I am buying a low premium, so this strategy is a net credit strategy. Okay, I hope the concept is clear. Now let's get back to the strategies. Okay, so what you have to do, you have to create two strategies. Okay, so I'll be talking about debit strategies today. Okay, because our view is bullish. We are not very much sure, but we are moderately bullish in our scenario, in our sentiments, right? So for that, I will create two strategies here. I'll create two strategies here. Okay, the first strategy will be bull call spread. Bull call spread. Okay, and the second will be bear put spread. Okay, so bear call spread and bear put spread, I'll talk about these two strategies. Okay, one will be when your view is negative, when you want to trade in the negative direction. The first one is when you want to trade in the positive direction, when your view is bullish, right? So I'll use it for the bull market, okay, and I'll use it for the bear market, right? I'll use it for the bear market. So this one is for that, and yeah. Now, what is the significance of this strategy? So first thing, when you are trading with this strategy, okay, so there are two short thing. That is, first one, your loss will be limited if you use with this strategy. So your loss will be limited. Okay, limited loss. So you can predefine your loss, like this much loss is you know, done. If my market will go against my direction, so this is the maximum loss that I can book. Okay, so limited loss, and also limited profit. Okay, a maximum loss, how much maximum loss you can bear? So maximum loss will be maximum net premium paid, sorry, net premium paid. ओके, जितना आपने दोनों पोजीशंस के लिए, दोनों लेग्स के लिए अपना प्रीमियम दिया होगा, मार्जिन दिया होगा, दैट विल बी योर मैक्सिमम लॉस. ओके, सो नेट प्रीमियम पेड. Similarly, this side also. Okay, so there is one more thing. There will be two legs. I'll add two legs here. Okay, I'll buy. Okay, I'll buy a ITM call. Okay, and I'll sell a OTM call. So you can see when I'm going with the bull call spread, I'm buying a ITM call. It means I'm buying a larger premium of in the money, right? And I'm selling a OTM means I'm selling a low premium, right? So this strategy is a net debit strategy, right? As I have told you. Similarly, when I'm talking about the bear put spread, so in bear put spread, again it will provide you limited profit. Okay, so there will be limited profit, again limited loss. Okay, so there will be limited loss. Then maximum loss will be net premium paid. Okay, the total amount of money you have paid for the margin, so that is your maximum loss. And the two legs we will add here, that is I'll buy a put ITM. I'll buy a put ITM and I'll sell a put OTM. Okay, so you can see when I'm going with the bear side, I'm also buying a put ITM. It means I'm buying a larger premium and I'm selling a lower premium, so it is also a net debit strategy. Right now, how you can use it in the real application, in the real chart, that we will see. Okay, so guys, if you are a little confused, okay, so you can rewind the video, you can take a screenshot also. Okay, now I'm getting back to the application. So in the Quantsapp application, if you want to try these strategies, you can go in the trading section. We have an option architect here. Okay, now in option architect, we have already made this strategy like bull call spread, and you will go for the bearish direction, so there is bear put spread. Okay, or you can make this strategy in custom also. Right, so let's see how we can make this strategy. I'm going in the custom. Let's select a indices here. So I'm selecting a indices, for example Nifty. Okay, so this is Nifty. Yes. Okay, now when I'm making this strategy for the Nifty, so first I'll make a bull call spread. Okay, my view is bullish but not very bullish. I'm moderately bullish. Right, my market go in the bullish direction, but I'm not that much sure. That is why I'll add a hedging position. I'll add a precautionary leg here. Right, so first of all I'll buy. So right now 25,758 is my trading price, so that is why I'm going with this one. Right, but I'll add a leg in ITM. I want to buy a ITM position in the money. So what I'll do, I'll go with this one, or you can go a little more in the ITM, a little deep in the ITM. So if I'm going deep in the ITM, so you can see this is right now my profit. Okay, this is my profit. Now for hedging, I'll sell a position, and what I'll sell, I'll go deep in the OTM. Okay, so if I'll go in the OTM, so I have to increase the price here. Okay, so for example here you can say I'm just sorry. Okay, now you can see I have added 2 lakhs. One, I'm buying the ITM options of Nifty. Okay, that is trading as 221, and at the same time I'm selling a position of OTM. Okay, that is trading at 25.4. Now I can also multiply my lot size. So for example, if I multiply my lot size, so you can see here, this is the profit and loss that I'll bear. Right, so for example I'll remove this and I'll apply it in tabular form. So the maximum loss I'm bearing is 14,000 when I'm trading with 3 lots here. Okay, 3 lots buying and 3 lots selling. Okay, maximum loss is 14,000. But when I'll go with the profit side, so you can see I am having a profit of 22,676 here. Okay, so that is approximately 1:2 ratio. Okay, and my loss in profit is predefined. I will not have more profit than this and more loss than 14,000. Okay, so that is predefined already. Right, so this is how you can create a hedging position. You can say bull call spread when you are moderately bullish in your sentiments. Right, similarly, and you can see already the name has been given in bull call spread. Now we will make a strategy. On what? We will make a strategy on bear put spread. Okay, so for that we will, for example, right now in Nifty you are in the bearish view, you have a bearish view, so you will buy a put side here. Okay, so in the money put side, I'm going in the money. Right now it is 755. Okay, so I'll go more in the money. Okay, yes, right now so it is more in the money, and again I'll sell a put position here. So for put position I'll increase this. Okay, so I have added a leg here, so I am selling the put OTM here. You can see it is right now the put OTM is at 34.2. okay, and I'm buying a ITM option here that is trading at 229 here. So I have created 2 position. First one is my view that I am bullish in my view, but not that much, moderate, and for that a precautionary leg, that is my hedging position. So that is why I am adding a OTM. Okay, OTM leg here. Now if I multiply it with the 3 lots again, so you can see here the maximum loss that I am facing. okay, in this trade till expiry, it is 14,974, approximately 15,000. Okay, my loss will not get bigger than this. Okay, and if I'll go for the profit, so right now I'm getting a profit of 21,276 with this strategy. Okay, so my profit and loss have been predefined that I'll get this much of profit and this much of loss. So you can see here also approximately I'm getting more than 1:2 ratio while applying this strategy, and this is the bear put spread. Okay guys, so this is how you can trade with these two type of strategies that I have shown you in today's video, that is bull call spread for the bullish view but not that much bullish, moderately bullish, right? Similarly, bear put spread for bearish view but not that much bearish, a moderate bearish view. Okay, so in both of these strategies you will get a limited profit but a limited loss. Okay, so this is how you can manage your risk also with not that much of bullish or bearish sentiments, but when you are moderate in your sentiments, right? So guys, thank you so much for your time. अगर वीडियो पसंद आया होगा तो लाइक और कमेंट कर देना जो भी चीज पसंद आई होगी, या फिर if you are having any kinds of doubt also, then you can comment us down. Okay, if you are new to the video, you can subscribe the channel also. Thank you so much. This is your trainer Ankit Singh Rawat.